Ladies and gentlemen of the crypto space, we're live on a Wednesday, February 9th at 11:27 a.m. A day like many days of late where it's quiet and the general public has no idea what the heck is going on because they don't even understand the words. They've never been taught. They have access to the information for the same reason I have access to the information and the same way I've begun or come to the place of understanding the things the way I do. Everyone has access to this shit. You got Stephen Van Meter, you got Jeff Schneider, you got Raul Powell, you got the entire Real Vision community that are cranking out macro talk left and right. It gives us a capacity to understand this stuff. So the general public doesn't like it. So, when the market's not screaming up 1,000%, it's quiet on Twitter. It's quiet on YouTube. It's quiet on our ultra rational Discord. It's quiet because there's no excitement. It's boring. But guess what? This is the time when you're in early, when it's quiet and boring, and when no one's looking. And everyone thinks it's the end. It's over. I'm going to go back to work. I'm going to save my dollars in a bank account. And somehow, magically, I'm not going to get fucked by inflation. Oh, there we go. There's the word. Inflation that everyone doesn't understand. So, inflation is a word. Inflation means to expand. Deflation means to contract. And think of a balloon, you inflate a balloon or deflate a balloon. There's more volume, there's more circulating supply, you inflate circulating supply, so on and so forth. So inflation is relative, boys and girls. You have, just like we're learning in the DeFi space that everyone's exposed to, you inflate a currency. So that's monetary inflation. When there's more currency units in circulation, you inflate a supply. You inflate a price, you have consumer price inflation, where the price of something is inflating, which is expanding or it's going up. Um, you inflate an asset price. The equities markets, I mean, if you look at the S&P, it's straight up. It's an inflated market. Whether it's a bubble or not, it's another story. And I would argue there's very much a bubble because if you look at the broad aggregate of stocks in like the Russell 2000, it's completely destroyed, whereas you still have small segments and small groups of assets, especially tech assets, that are completely vertical still. That's a bubble because it's a deviation from the average. It's an aberration. So there you go. That's the brief rundown of inflation. So everything is connected in a loosely coupled fashion. You inflate currency units. There's more currency units going after maybe the same, if not, hopefully not, a decreased supply of goods. There's more demand than supply. That drives prices up because the only way to decrease demand is to increase price. And obviously, Steve Van Meter talks about prices get rejected at some point, and a smart person once said, "Inflation is deflationary," and I would say deflation is inflationary. Um, and so it's the very interesting different ways to look at things compared to the way the general public tends to look at them. There's more meaning to these things than just the word inflation. So, what does everything come down to with regard to where we are? I would argue inflation, the headline that's used to drive a narrative in social media, is separate and apart from price stability, and we'll start to see a decoupling from the inflation narrative and more focus on the price stability narrative. Whereas government can start to say, oh, inflation is turning over, it's starting to get under control. And soon prices will start to stabilize. They'll stop going up as much. Maybe we'll even see a bit of deflation in prices as demand potentially decreases. Because really, price inflation is completely a manifestation of supply and demand. You could have deflationary money supply or disinflation in the money supply. You could still have increased demand. Maybe a certain segment of the population happens to be doing well and they're buying up a huge amount of supply. So you could still have CPI with less currency units in circulation. And we know for a fact empirically that global dollar supply, including euro dollars, is disinflationary. There's a decreasing increase of supply over time, so it's not keeping up with growth or the growth rate, and this is constricting on the potential production capacity of all of the world. So we know there's a disinflationary pressure across the entire ecosystem. And this gets into a bit of a rabbit hole talking about the CBDCs that countries are pushing and hegemony and the power and weaponization capacity of the dollar. Um, and that's just a complicated story. So right now, you stop the printing press at the U.S. level, you create a disinflationary pressure on global money supply, and you're going to put immense pressure on the rest of the world because the rest of the world can't print dollars. We can, so we are in control. Therefore, literally by raising rates and just talking a little bit hawkish, you put constriction or you put downward pressure on every other country on the planet other than us as the currency producer. So it's a complete political shit show, a monetary system. But where are we? I think we're heading towards a shift of the narrative from inflation to price stability, and they'll start saying inflation is under control, and you get a little bit of dovish talk out of regulators and news media, and boom. Well, there's more dollars in history in deposits than that's it. Period. Drop the mic. So where those dollars are going to go? Oh, you know, folks, the general public doesn't know what to do with them. So they're sitting in bank accounts, but maybe the trend changes where they start to deploy them. They start to buy things. They start to buy assets. You know, if asset prices start going up, you guys know what happens to people's motivations. Nobody buys in a market that's down. The general public doesn't buy something that's going down in price. The general public doesn't buy something in market conditions like this that are crab walking to the right. The general public buys shit that's going straight up. So when stuff starts going straight up, it's going to suck all the money, or more money, you know, a lot of money, out of bank accounts. They'd be like, oh my God, it's going up. I'm going to be rich. I'm finally never going to have to work again. And bam, you know, then you get this shit. And it falls down to support because that's just the way humans are psychologically programmed. Um, they're completely programmed to have money taken from them. That's what it is. But we understand that because we talk about it and we're able to buy when, oh, this is horrible. The general public thinks it's horrible. No, that's not horrible. This is when everything is contracting and you get price action congestion, which means after all these sales, we have people buying and people buying and people buying and people buying, and you got a floor getting created. You got a floor that's higher than historic floors. Hey, would you look at this? That's an interesting observation. Let's paint the rectangle here. Yeah, let's draw something like this. Now look at that zone of congestion. That's I could obviously draw this zone of congestion, but look, it's a higher zone of congestion. There's congestion here. There's a lot of activity, and look, that activity, you know, let's put a horizontal line. You could say that activity, you have activity below it, and then you have a significant amount of activity above it, and you have these series of higher lows, higher lows, higher lows. You clearly have brush, you have this clear period of irrational exuberance where you have a significant deviation from any of these trend lines in an upward direction. So that's clearly irrationality at play, and it comes right back down. We've said historically that if things go straight up, they're going to come right back down. Look, it happened here as well. And in many regards, you have a nice trend line. Would you look at that? Look at that one trend line from here to here, smacked right on the trend. So everything between here was an aberration from the trend. And the fact that it actually hit the trend line here, spot on, is extraordinary. So we're deviated from that trend line. We started a new trend line. So we have here to here. We have here to here. So there's another trend starting there. And then we had a breakout of this short-lived 1, 2, 3 touch point triangular compression, go figure, and a breakout to the upside. So I love this green line because it was a breakout, a retest, boop, and a higher high, which is the trifecta of bullish confluence. So by definition, this chart is in the most ridiculous setup I could possibly think of. Albeit you do have the overtones of a head and shoulders, but we do have these trend lines that have shown great resiliency over a fair amount of price action. Boom, it could fall back down to here, 19 bucks. Maybe it finds support on the 21. That'd be sweet. That's bullish. Price go down is bullish. General public doesn't get it. So the title of the stream was Inflation. We covered that inflation is relative. It's relative to something specific. Just saying the word inflation means jack shit. It means anyone who says that, oh, the inflation is bad, they have no idea what they're talking about. What, the monetary inflation? The equities inflation? The housing price inflation? The horrible, crushing inflation of dog walkers around the country. I mean, there's just so many more dog walkers around the country. It's just inflating. There's a lot of inflation. I'm horrible. So what crypto to buy? You know, clickbaity headline. I'm not going to tell you what damn crypto to buy, but I'm going to tell you what types of crypto to buy. And it's more obvious than ever, a manifestation of technology in the tech sector, tech equities. Tech equities suck. They're useless. They pay you nothing. Their prices are completely irrational. I don't know anyone who could possibly think they're decent to buy. We talk about cash flow all over the place. And you could get cash flow in the legacy financial system and REITs, and maybe you get 6, 7, 8, 9, 10, 11, 12%, which is cool. But where's the excitement? Where's the innovation? Where's the tech? Where's the growth? And that's what DeFi offers. DeFi offers tech that pays you, that has immense 10x, 100x growth potential. So you look at this shit like it's a business. Look at crypto like it's a business. You look at cash flow. You look at CapEx, which is their treasury, versus their income. You look for a cash flow positive balance sheet, which makes me actually need to re-entertain Maker, albeit their tokenomics are horrible, which has caused significant depreciation of the asset's price. But it's a cash flow positive asset. It's a cash flow positive business. And cash flow positive means everything, because those are protocols that are in business and they have cash flow to pay employees and they have cash flow to warrant valuation. And with valuation, they could get investors. And with investors, they could get marketing and advertising and partnership and growth and all the fancy shit that traditional companies have been accustomed to. So there's no difference between these protocols and businesses. By far the worst way to approach the crypto space is to not appreciate that and to just look at price action of an asset. All this stuff warrants evaluation from a traditional business perspective. You want to know their balance sheet. You want to know their initial investors. You want to know their debt obligations. You want to know how much free cash or cash flow, how much capital they're working with, and responsibilities, which is debt obligations. You want to know who the investors are. You want to know who the developers are. You want to know the audits to make sure that it's relatively secure. But even in the face of technical complexity with security incidents, you still have very powerful assets that have narratives that are stronger than a security incident. I mean, Key fell to 13 cents on the hack yesterday, and it ripped up to 97 cents. It was completely bought up, and who was affected? The early investors, the people that had vesting contracts. So there's a bit of a complexity for the team to figure out. But if you look at the market cap of the asset, this thing is dirt cheap. It's a 50 mil. I think it's a 50 mil asset. 47 mil. Mashinsky could buy this thing, with coins under his couch cushion, and that's something that's quite interesting. 281 mil TVL, market cap to TVL 0.17. This is something that screams at me that it's likely cash flow positive, or at least can be cash flow positive, because all they have to do is scale their vault, scale their natural balance of MAI, and then they're able to scale the amount of revenue the protocol makes. by drawing more capital in. And frankly, Mashinsky himself could turn the entire protocol cash flow positive if it's not. Uh, how many billions of dollars of stagnant equity does Mashinsky have access to via Celsius? There's billions. They're sitting there doing jack shit. What are you going to do with Cardano? What are you going to do with XRP? What are you going to do with these things? BCH. It's useless stuff. They're not generating any cash flow. They're just sitting there stagnant. So leverage them, get 60% in cash, and generate cash flow. And that's exactly what has me peaked about QDAO. It's going to take some time for the price action to stabilize, but it was quite reassuring to see this incredible handling of a significant circulating supply increase. It was all bought up. Now, maybe there's more controlling power, maybe more centralization, maybe a large actor bought up a huge amount of supply at a significantly depressed price. We'll see. But I think the relationship with Celsius X and the bigger picture with Mashinsky and Celsius connected could potentially be something very meaningful. I like the crossover between CeFi and DeFi. I think Celsius X is quite interesting because that ropes in the general public. That gains access to billions of dollars, and that's billions of dollars that Celsius wants to provide ROI on. And how do you generate ROI? How do you generate ROI using XRP? You can't do anything. Nothing. You can't do anything with XRP. But what does it have? It has equity. There's value in it. So what do? You wrap it, you throw it on Celsius X, you establish the liquidity pool, so you have a capacity to liquidate, sell, buy, so on and so forth, from a smart contract perspective. And then you're able to leverage it, use it as collateral, borrow dollars. So $1 million worth of XRP, great. I take out $500,000 worth of cash, throw it into some incentivized LP positions, get a 15% return on the money. All of a sudden, XRP is cranking out, let's say 13% return on the money, and Celsius gets to capture 2%. There's a business. This is a critical component of their business enterprise. It'll take time to play out. They want to make sure that the contracts are solid. We'll check back in a year. Uh-oh, I just said time horizon. Time horizon. Oh, it's not 5 minutes. Stuff in this space doesn't take 5 minutes. So you got to put your chips on the table and you go out, let things play out. It's not hodl. Damn it. Damn it, folks. We're not hodling here because I'll show you guys. Polygon. We're not hodling here, boys and girls. If it loads, it loads. Because you get it 111% return on the money. Wow, the entire story has a chance to play out. And if you lock for 4 years, you get 4x that. So I have no idea what the hell this thing's going to be paying. All I know is I got like 110,000 with the depressed price, something like that, a little over 100 grand. And if I'm going to get 400%, that's pretty cool. If I'm going to get 100%, that's pretty cool. All I know is, what do I want to see? I want to see a small percent of my portfolio. I know it's a large number, but I want to see a small percent of my portfolio. I want to place it in something that I see potentially being large in a long time horizon. 4 years. I'm going to check back in 4 years and hopefully see 100 grand turn into 20 mil. And that's why I have this position. Do keep in mind, we always talk about position size. That's mission critical. Look, this is a perfect example. I deployed this quantity of capital to this position. And when I heard of the exploit, I didn't really blink an eye. I'm like, okay, and let it play out. Folks will run frantic. They'll be like, oh my God, I'm going to lose all my money. That's because you took on too large of a position size. Too large of a position size, and you don't have comfort. And you're freaking out. You're like, what am I going to do? I lost all my money. No, 1%, 1.5%. So, you guys saw the size of my position, but that doesn't mean anything. It's a small part of the portfolio. It's a small percent of the portfolio. So I'm cool. I saw this and I was like, all right, let's see how it works out. I mean, Mashinsky like at 6, 7, 8 o'clock in the morning yesterday, and Celsius and Celsius X, they were literally talking about key Dow like nothing was going on. Like it was like, all right, there's a little bit of a hack. I mean, they could literally buy the 50 mil in circulating supply with change underneath the cushion. So I guess I don't want to focus too much on it. This isn't a point to shill an asset. It's a point to highlight how to find assets that potentially are meaningful. And to be respectful of position size such that when you see events like yesterday, you don't have to really think about it too much. Price action looks good across the board. Convex looks healthy. Look at this congestion zone. This is the most remarkable congestion zone of price action. Just it's remarkable. I would say across the entire crypto space, but that's not the case because there's so many damn incredible assets across the crypto space. What I find so fascinating when I see price action congestion like this is I see the irrational exuberance. I see the irrational exuberance. I see an ABC correction like no other. That's just like a spot on ABC correction. Straight down to the 200 EMA, 200 SMA in the daily. This is remarkable, this price action zone. Absolutely incredible. So this is going to be nice. Patience. You don't have the wrong asset if it's not going up from $30 to $3,000. That's just the bottom line. You don't have the wrong asset. You just need time, patience, proper position size so you can sleep at night, proper time horizon. And as long as the narrative is unchanged, respect yourself and respect the portfolio and let the damn narrative play out. So when I see this chart, all I see is curve. All I see is the power of the MMT money printer. And I know that I've attached myself to the right assets. This is a great chart on the daily because this is where I think we are with regard to short-term market expectations. This chart, this is a remarkable fractal right here. We hovered around the bounce. Look, fall below the 200 SMA, bounce back up to the 200 SMA is right around here. Watch it break above on some bullish market activity, and it slams into the 50 SMA, 100 SMA, but it gets rejected, and you get the 50 SMA, 100 SMA bearish cross, just like you have right here. I'll put the paint. Just like you have right here, just like you'll probably have right about there. Goes up, falls down, maybe a little support on the 200 SMA, and oh, damn it. People start to freak out. It falls back down to the lows, and then it falls back up to the 200 SMA for resistance. It falls back down again. Now and then, and then you go over here, and then you got to do this. Oh, it's all messed up. Stop drawing. All right, the whole point was for it to just go straight up after that. So these are two great fractals. My drawing tool gets messed up and I don't want to refresh the damn page. Let's take a look at spell because obviously that's been under the hammer lately. Oh no, that's the DXY. Here's spell. I look forward to their token contract changes. I look forward to the revenue stream. I still retain my position size. I think I'm going to because of the CDP narrative. Um, obviously you have DAI, you have MIM, you have MAI. Frax isn't really a CDP, but the stablecoin narrative really, I think, is the strongest narrative in the entire crypto space. I'm a little hesitant for MakerDAO because I think they want to go the regulatory route, and that's just distasteful. I'm not interested in a government regulated crypto asset, so I'm more interested in something that kind of skirts the line, something that's internationally managed and kind of is like, all right, you got these regulations, but we're located in Central Africa operating off a satellite. What are you going to do? These are smart contracts. So I kind of like that more so than the directionality that Maker's heading. Albeit I like the cash flow positive aspect of Maker. I like the fact that it's a CDP. I like the fact as part of the stablecoin narrative that I talk so much about. So you got CDP stablecoins, you got algorithmic stablecoins. The three The three CDP stablecoins are DAI, MIM, MAI, and they're quite interesting. You got Frax. Um, Frax is the other component of the portfolio. I don't have anything else. I'm not exposed to Terra and UST. It's too large of a market cap. You're not going to get to get a 10x on that type of asset. You're going to have a very long time horizon, and a lot could happen between now and then. It's much more easier to get a 10x on another asset that hits the same narrative that happens to be smaller in scale and scope. And I think those types of assets make sense to be stuff like FXS and the Frax protocol. My is 50 mil. Keydao is 50 mil. Okay, great. That's microscopic, but it has a massive connection to Celsius. So that's quite interesting for a 1% play. 1% to 10% changes everything. You guys know the deal in that regard. So that's the vast majority of the charts that I got up. Here's Frax. I'll show you guys Frax. Frax looks good. 21 and change. Last time I looked, 21.37. Look at the price action zone of congestion, boys and girls. Look at that zone. Look at that purple zone. Woo! Look at them higher lows, and clearly you see the irrational exuberance. You see the exuberance, the deviation from the trend. But bam, 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 hovering right on that support line, that trend line, and you see the zone of congestion. And you see guppies. Look at these guppies that are compressed. Look at this. Take a look at this. Oh, look at that. That's some serious moving average compression. I mean, what happens in a situation like this is if you have any bullishness in the markets, you break above here, you fall down, turn it into support, you get your trifecta of bullish confluence. That's where, you have a spring wound up or a rubber band wound up and you get a big snap to the upside. Just be careful with this exuberance. What goes up most often comes down, falls back to trend. It's the natural process of mean regression, which is clearly artificially contained with regard to the equities markets. That's a whole debauchery unto itself. Let me go through some comments. Record high number of people on the stream today. 148 people in the stream. 125 likes. Hey, we did better. I can't say we can do better because we did better. That's good to see. Let's hit some comments and wrap up the stream. Dan's in the house. Asher, the ultimate clickbait headline. All right, fine. I got a good clickbait headline though. What am I going to tell you to buy today? Oh, we're going to buy this. We're going to buy this. No, go watch BitBoy for some bullshit like that. My goodness, don't watch BitBoy. I didn't say that. I take it back. Oh, that's bad. That's bad. Stops in the house. Bitcoin, bro. Buenos dias, senor. Breakless Rider, good morning. When live girl chat spam. Gels is in the house. Always a pleasure. Barry DGB, greetings again from the Netherlands. Always a pleasure, my friend. That bad guy, 20 people watching, only 5 likes. Yeah, that was a little bit ago. I think the clickbait headline got this number up big. Critical Mass is in the house, recovering from my almost murdered portfolio. We can do better. Watch the position sizes. Watch over concentration and the risk profile of the asset. Focus on cash flow. Focus on assets that have positive cash flow that pay people or are about to pay people. We're looking at multi because, look at the price action congestion. The chart just speaks of support. Look at that congestion here, because look how much support was it churned like butter. For it to go below that is quite meaningful, and everything on this chart screams upward trend. Just black out the peaks and follow the lows. And we talked about the chart. That's the deal. Watch the concentration. Concentration is how capital is made. Over diversification is just fear and likely lack of due diligence into the structure of the portfolio. Newer entrants, stablecoins, you guys know the deal in that regard. 1% plays, 1% to 10% changes everything. Keep it simple, follow the rules, and we'll all do well. Inflation is inflationary on the price value, right? If you have less, if you have deflationary supply, you're going to have inflated prices. So Trader Z gets it. The word is relative. And the word is going to confuse the crap out of the general public who has absolutely no idea what the heck the deal is with the complexity of stuff going on. Raul, hello. Sup, Posh Captain? Do you think long term Mim and Spell can regain the trust after the seafood debacle? I don't write off Spell, which is why I have a position. I'm I'm not selling my remaining assets. I believe that it has the proper implementation and integration into multi. I believe that Merlin and Squirrel are solid devs. I believe they're going to pivot the tokenomics towards a cash flow model. I believe there's a lot of MIM in circulation. There's a lot of debt interest payments. And I believe in CDP stablecoins. And of CDP stablecoins, there's few. How about that? So the drama, the social media. Like I don't give a shit what social media is saying about an asset. I care about my opinion of an asset, a rational observation, my analysis. So my analysis says watch the position size. That's it. Watch the position size, but I want exposure to it. I want exposure to Spell. I want exposure to Key. And the charts say, all right, the charts say I should be cautious of the position size, but it's nice to see support here at 0.006 cents. We haven't seen a lower low thus far. Clearly, there's a triangle of compression here, but it is higher lows, meaningful higher lows. So maybe it is. Maybe it turns out to be an ascending triangle more so than triangle of compression. It's something like this. Take a peek. I mean, that's a decent trend right there. I mean, we'll see how it plays out. So that's more of an ascending triangle, because clearly you have something like this, but I would draw it more so like this. At least that's the feel I get. Horizontal line. There's a certain feel because it's more pronounced. The slope is higher on the lows than it is on the highs. So this gives me the feel more of an ascending triangle. That's very subjective. What I say is not necessarily what plays out, but this gives me enough courage to retain the 3% or so position size that I have in the asset. See the position size. So many folks go all in. Don't do it. Critical mass inflows are writing off Spell because they loaded their bags. I think deep down everyone knows Daniel will rise again. He's impressive, and I like him, and I would always be happy to talk with him. And obviously the empathy I've talked about over the last couple of weeks. And I'm more than happy to listen if he has any thoughts and provide feedback. And I'm there for him. I'm that kind of guy. Lots of good nano cap crypto stocks doing the same thing right now. Stocks! Asher said stocks! What do we think about stocks? Stagnant equity, cash flow apps, and zombie companies. All right, maybe there's some shit that you could do and suck the capital gains out of stocks. Maybe you meant small crypto plays, but regarding stocks, you guys know my sentiment. What a waste of time, stocks. Are you still investing in stocks or all in crypto? No, I do have my stocks. My stocks are pre any of these relatively sophisticated narratives. My stocks are from 2016, and they're all every stock I have is lithium, cobalt, nickel, and graphite. Target 2030. Period. And I told myself in 2016, 6 years ago, that I'm not going to touch it, and I haven't since then. Variety of nice 10 baggers in there. 10 baggers, 5 baggers, 7 baggers, plenty of multiples, relatively small position sizes, a couple $100,000, and I'll check back in 2030. That's the deal. I'm not going to liquidate though. I got like 95% of my capital in the crypto space. I'm sure as hell not going to put that shit in the stock market, but I'm going to keep my little hedge in the critical materials sector. Some gold and stuff. That's all stored on the brokerage. Are you still, Joe? Nancy Pelosi is doing a press conference. She had the audacity to say the Stock Act must apply to the judiciary while our own trading values are under scrutiny. Hypocrisy in politics will drive you nuts. Bitcoin, bro, did you participate in AVAX more? I did not. Asher, 60% equities, 40% crypto. Well, there you go. There's a 60-40, baby. Well, it's interesting. 60 is usually growth, and 40 would be like bonds and historical standards. Um, you know, it's complicated because crypto is a different beast than any historical portfolio could ever have been. Because you have stable coins and you could have dollars in a money market in a brokerage account that's useless. It's earning negative 10% a year at current CPI. So, but in stable coins in the crypto space, you could have positive real rates. Frankly, well, take a look. Uh, so I have a load of stables right now on Polygon. Let's see if it loads. Polygon, it should load. Come on, baby. How come it never wants to load while I'm on stream? All right, so I got my stables here at about 14, 15%. It was up at 20% when Key was at about a dollar. So that's awesome. So I'm getting 14% on dollars while folks have dollars in a money market on a brokerage account getting minus 10%. So I'm getting 4%, 4% to 10% depending on the price of Key at any given time. Ashamos equities accumulated March of 2020. So old narratives are important to retain, and it's important to be respectful of newer narratives. And ultimately, there comes a time where you do an opportunity cost analysis and maybe even an inferior narrative, or at least a narrative that doesn't have as much of an opportunity as a newer narrative, is warranted to retain because it is a hedge. So I consider my exposure to critical metal miners a hedge against all these tech plays that I'm exposed to. And you can't have just overwhelming concentrated exposure to one thing. It's important to diversify a little bit, uh, just in case Peter Schiff is right. It's a shame Dex Tools isn't distributing a dividend any longer. Yeah, that means a pivot may be in order. I haven't heard your thoughts on GameFi as a trend. It's a big deal. I'm not too much into it. I have my Gods Unchained collection. I have like $20,000 worth of cards at some point. I bought them so cheap, and it's picked up. It's my favorite little collection. It reminds me so much of Magic the Gathering. Oh my God, if I had my Magic cards from when I was a kid, it'd probably be like a $1.5 million deck right about now. Power 9 all day long, baby. Woo! These cards are worth a fortune now. N2 is not paying a dividend, but it's using node holdings to buy back and burn. Buy back and burn is not so hot in my opinion. Hey, Captain Brian in the house. What's your take on F2.0 and seamless cross-chain interop? You guys know the deal. So cross-chain interop is exploding. Everyone's talking about cross-chain interop. So that is why it is a 2022 core narrative. F2.0, it'll be a consensus layer. It's not going to be a transaction layer. That you have way too much going on Arbitrum, Optimism, ZK, Phantom, Avalanche. The list goes on and on. I mean, look how many protocols that Multiswap is integrated with. Not even protocols, platforms. So that's 32 chains. So I'm not I expected that. I called that. It wasn't going to be Ethereum 2.0. It was going to be Ethereum 1.5. And it's going to be an updated POS consensus layer. And that's all they need to do. My expectation for seamless cross chain interop is we're going to be doing transactions on any chain we want with our assets stored on Ethereum. Meaning, I'm going to have my assets on Ethereum and I'm going to be able to trade to whatever asset I want using Phantom, using Avalanche. And the net result is the assets back on Ethereum, the most secure chain. And you won't even know that you're operating on the other chains. They'll just become seamlessly consumed, part of a transparent transaction, is my opinion. Hey, Captain Mashinsky don't have a good reputation among some of the former Cell community. Cell was admitted to liquidity bootstrapping and constantly dumped on. Yeah, I don't care for much for people's opinions. I care that he has built one heck of a business. It generates returns for the general public who will in no way, shape, or form be able to interact with DeFi. And I think what he's building, has been building, and is maturing significantly, is a banking implementation. If it walks and talks like a money market, like a bank, it is a bank. He provides banking functionality. The only difference is, instead of putting your money in Chase, where they're fucking you, you're actually getting an ROI in the Celsius Bank. Look, I call Aave a bank. If it walks and talks like a bank, it is a bank. I don't need no federal charter or someone to tell me something's a bank. I know what is and isn't. Simple as that. And I don't care much for reputation. Not touching anything related to Mashinsky is understandable. Watch position size and be careful. Has your narrative and spell changed recently? No. Oh, I wasn't showing you guys my screen. 32 chains. Let's scroll down. Let me see if there's any further comments. I'll wrap it up in a couple minutes. I think I showed you guys most of the stuff I was interested in going over today. Dan, you said to go watch BitBoy and 10 people jump off the call. I think people actually went to go watch. Don't do that. Don't do it. He's going to break your brain. He's going to get you to buy some shitcoin that's going up 1,000%. And then it's going to go down to zero when all the early stage VC investors bought it. Listen, I've gotten a couple of deals. I've gotten, you'll see something at $1 and I'm able to buy it at 30, 40 cents, and it goes up to $10 in a year. You could sell it, but that's where an appropriate deal comes in, where I'm incentivized to not sell it. And do you think everyone in the crypto space has honorable intentions and long term vision like I do? No! These people that are buying these early rounds, these seed investments, these VC firms, you get a 10x or a 100x in your money, they're going to dump on the general public and extract money right from everyone's hard earned wallets. And that's why you have to be careful. You got to watch the details of these assets. How much is being sold? Who is it being sold to? What kind of fees in play? Initial token distribution is critical. You can't just buy a random thing that's displayed on the front page of Coinbase. No, that's not going to work out well. Killis mixed, a pleasure. Have you looked into Liquid and Beads? Yeah, very interesting. I don't have anything deployed to them currently. Polygon's currently lagging on this RPC endpoint. Let me see if I change it. Show you guys. Let's see what it's cranking out. Come on. That's not fair. That's not fair. Yeah, I'm interested in LQDR and Beats, but I don't necessarily need exposure to it. You know what's on Beats is on Beethoven is Ring, so that's nice to see. Good for them. I have a position in Ring, providing them a bit of advisors help, and I look forward to helping them further with tokenomics as their protocol continues to evolve and get iterated on. Seamless cross-chain liquidity provisioning. I mean, that's pretty cool stuff. Oop. I mean, plus they nailed the memes. I mean, they nailed the memes. Oh, that's Polygon. Let's go over to Phantom. Boop. Anything? 17%. That's about right. 17% on stable coins, which is pretty cool. They automatically manage liquidity between USDC, my, and USDC to USD and DAI USDC on Spirit and Spooky, and generates an aggregate 17.16% return on the money, which is pretty cool. And they have this new display, which I encourage them to add annual, monthly, and weekly earnings. So it gives you a nice estimate of how much money you're actually making. If you're shown how much money you're actually making, you're significantly less likely to liquidate or exit a position because now it's a business. Now you have a revenue stream, and that changes everything. Mix, who's BitBoy? Is that a gamify thing? It sounds like a Game Boy. I'm almost certain Bitcoin accepts money to promote products. My man Joe. I don't know what it means, but it sure do sound good. I'm almost certain Bitcoin accepts money. Oh, BitBoy. BitCon? BitCon. Not BitBoy, BitCon. The guy requires dollar for his time as well. Yeah, but I've seen his content. It's just he's so far off base. It's very disappointing, and I empathize with the people that watch him because they're so desperate for solid, meaningful, rich information, and he just gives you shit. He gives you talking points and headlines and no education on how to look into an asset to see if it's actually good or not. How much risk are you taking? How to construct a portfolio? What's a rational position size? What's a rational time horizon? He's never used those words. All right. I hit you guys with a lot of good information on the stream. We started with what the heck is inflation? We talked about the state of the markets. We talked about the headlines of how news media is probably going to adjust in the coming weeks, in my opinion. We'll see what plays out. We adjust our narratives as the story unfolds. But overall, I like the way the markets look. My portfolio is basically solid. I haven't touched anything. I got a bunch. I'll tell you how much my stablecoin balance is right about now. Sitting at about 15%. Food for thought. That helps you guys out in any way, shape, or form. Vasco, I took the plunge and bought FXS and staked on Convex. Thank you, Noah. FXS is one of my larger positions, coming in at 18% of the portfolio, and that's very important to understand. I tell you these positions not to buy an 18% position size. Do you think I bought 18% worth of Frax? No, I was buying Frax at $3. It's sitting at $21. Plant seeds. Let the portfolio grow into the size that it wants to become. It needs to emerge and evolve unto itself. If you force a portfolio to try and become something you want it to become, that's how you lose money. That's how you don't have conviction in a position, and you're like, you buy something, oh, you sell it, you got 10% slippage, 5% slippage. You end up burning your entire portfolio with slippage. Avoid that. Avoid that. Quantified. It should be good now. But anyway, let's wrap up the stream. 150 people in the stream, 140 likes. I really appreciate it, everybody. We did better today, and we're going to keep doing better next time. Wednesday, February 9th at 12:15 p.m. Thank you, everyone, for joining me. Tell everyone to subscribe. After party on Discord, it just got cleaned up, by the way. We got some new category organizations. It's pretty cool. It's good to see. For the most rational place to talk in the entire crypto space, everyone's welcome in our Discord. You all have a wonderful day now. I'm going to see you again on Friday. Peace.